How's it going, everybody? Welcome in, welcome in. My name is JT on behalf of the Ethfinance EVMavericks here for hour number 74 this lovely August 9th, 2024. We have a surprise guest. We lined this person up, and he's a familiar face with the Mavericks over the last few months. This is James Kiernen from Octant. Say hello to the world, my friend.
Hey, thanks for having me, JT. Really excited to be here.
Real excited, man. We just we got connected, and a fellow Maverick, B Broad, is spearheading a nice little initiative. And we're going to talk a lot about Octant and what it means for the EVMavericks. And we're just super excited you could carve out a few minutes with us. I know you're a super busy man, so I'm going to get right into our intro. The Weekly Doots live stream is all about showcasing the best of the week from the Ethfinance community on Reddit. This is a read-along reaction series. And if you want to follow along, head to dailydoots.com, designed and produced by our very own Hanny Abu. And while you're at it, go grab today's PO app. Now available for checkout on Ethereum, Arbitrum, Optimism, and Base. Big thanks to Tricky Troll for capturing and curating each day's Doots, and the A word for curating this most beloved weekly list. Subscribe to us on Apple, iTunes, Amazon, just wherever you search Ethfinance EVMavericks, and get notified whenever this podcast drops. It's also available on Libsyn, Spotify, and elsewhere. Mint this episode if you'd like to support this podcast at pods.media/EVMavericks. If you're watching my streaming window on Discord, make sure to mute that window to avoid any echoes. And as always, if you know someone who wants a piece of this action, send them my way. All right, we're going to jump right on over to dailydoots.com. Let's look at the rich list for this week. 696_ETH hanging on to that number 10 spot at 82. Hanny Abu moving up to 87. Scientist at 90. Harag at 93. Crypto Wow Currency at 98. At the number 5 spot, set one less at 103. Tricky Trolls at 113. Benito 2030 at 134, Logri the Bard at 142, and Super Fizz, the almighty everlasting Super Fizz, sits atop the leaderboard for this week at 211. All right, we have upcoming guests coming from Puffer Finance on August 23rd, Amir and Jason. We've had to reschedule them a couple of times because they are out there hustling, busy, building stuff with Puffer Finance. They have a pretty interesting and a very wide-ranging liquid staking thing going on, along with the eigenlayer stuff. So I'm going to need some brains on that podcast to ask them all the right questions. And we know we got them right here. All right, so for this week of August 9th, the morning roundup, here we go. Hey, Chibi chimes in. Ethereum Frank the Tank gives us a price at 26.6254. Vinegar strokes at 0.043 on that ratio, and uses Brink Video clocking us at 90,771 hodlers. This week's haiku, courtesy of JS Tears. It's a scary chart. Fundamentals outsmart. It's merely a fart. And there you have it, ladies and gentlemen. How does he do it? JS Tears, how do you do this? The weekly haiku. And guess what? It's Chota time. ETH, take my energy. And finally, we're going to do our shit post of the week, because we always like to start with the best for first by user Empire Stake. Be me. Wake up cozy Airbnb. Wake up in a cozy Airbnb on a fine Sunday morning. Tropical storm Debbie cancels the flights home. F that. JPEG. Wife and I decide to drive rental car back to New York for a 12-hour drive ahead. We leave at 11 a.m. ETH price tanking. Watching it on my Apple Watch. I realize I have a big loan on Aave. Sweating.jpg. Remember liquidation point in low 2000s? I can't remember the exact number. The anxiety intensifies.gif. I hit traffic at nearly 12 a.m. Price dropping faster. Panic mode.exe. Arrive in New York City. Get in Lyft. Tell the driver to go fast. Driver understands and drives like a maniac. Wife has no idea. Get home. Check position. LTV's at 76%, 4% away from liquidation. Fire up the ledger, send more crypto to lower liquidation price by half. Calm.jpg. And he signs off with what a day. Oh my gosh, that is terrifying. That's not That is a terrible shit post. Empire Steak is a duder number 3. I hope you got your bases covered, my friend. It sounds like you did. And hopefully you're able to take advantage of that bounce. All right, very good. Well, we're going to pivot right back over. We're going to get right into this. So, James Kiernen from Octant. I'm so glad we've got a nice crew here in the Public Voice channel on the Mavericks Discord. We're going to talk all about public goods and staking and how the EVMavericks can get involved. We've also got B Broad in the chat as well. He's going to be our point maverick on this deal, and a lot of this is going to be taking place on Telegram. And we can figure out ways to use Discord. But it looks like we got some Mavericks all signed up. So, James, why don't you lead off, and then B Broad, you continue the conversation and help us understand what the opportunity is in front of us.
Sure. Is it better that I unmute Discord or Zoom?
Just on Discord. Everything stays muted on Zoom.
Cool. All right, sweet. Well, thanks for the intro, JT. Lovely to see many faces here that I've seen before. And thanks for having me on the podcast, man. Really appreciate it. If maybe just giving a little context, some folks might not be familiar with Octant, so I'll just paint a little context there, and then we can jump into what this is all about. So Octant is a platform that launched literally a year ago yesterday. We just had our first birthday yesterday, which is cool. It's a project that's using a really old Ethereum treasury in Golem and staking a large portion of that treasury, and then using the yield to run grant rounds every 90 days. So it's fairly interesting. The way that it's set up is that users who lock our token into the Octant smart contract will receive a staking yield proportional, or a little bit more than proportional, but for all intents and purposes, right around proportional to how much of the tokens you lock in. So if you lock in 1% of our total supply, every 90 days, you're going to be receiving 1% of what we earn in staking rewards, like around 9 or 10 ETH. We've run 4 grant rounds now, and we've distributed, I think, 1,100 ETH to public goods that have participated. There's been another 660 ETH that have gone to our users. We've had a lot of reflections over what's working, what's not working, a lot of things around what's not working, and we're definitely looking to improve that as we go. And it's why I'm here to share some exciting things with you today. One of the really big things that we've noticed is that because we have projects that are strongly signaled by the community, and then we have projects that are not, basically that has somewhat created a little bit of a monopoly, or I don't want to say collusion, but there's essentially 2 categories of projects that we're noticing in Octant, which is projects that are consistently getting funding and then projects that are not. I know one of the projects that participated a few rounds ago was being built by Haniabu, and it was really sad for me to see that his project just wasn't getting that much support, even though the things that he was doing, I think it was State of ETH that he had applied for. A great project, but just wasn't finding community support. And part of the reason for that is because there have been a few communities, a few projects that have been able to mobilize their communities and getting them to lock our token in. And so if you're a project that's able to do that, you so far have been able to consistently get funding round after round. And if you aren't a project that has a big community, or a community that has been locking our token, you're kind of on the outside looking in. And this isn't what the intention is for Octant. Octant, we're trying to have a wide surface area around the projects that we're ultimately supporting the public goods funding ecosystem. And so I have been championing for a long time with leadership, and have finally gotten approval to really go on a crusade, so to speak, in finding communities that give a shit and getting tokens to them and getting them into the system, so that we have a much broader or a much more diverse perspective or expression in what projects should be getting funded through Octant. And so that's why I'm here today. If you are interested, I would love to get you tokens. And the soft agreement is this, that you're going to participate at least for the next 2 rounds. And you don't unlock your tokens until at least February 2025, which is shortly after 2 rounds from now. Hopefully we have some incentives to where you're going to want to keep it in longer than that, and I'll talk about one of those in a moment that I think is pretty exciting. But that's just a soft ask. There's literally nothing I could do to say you have to. Like once I give you the tokens, you could literally just go and put them onto an exchange and sell them right away. I couldn't do anything about it, but that would suck because that would sort of hurt my reputation with leadership, and that would also hurt the reputation a little bit between Octant and the EVMavericks. And I'm really trying to build this up because there's a lot of great builders in this community. JT and what he's doing with the Doots is something I would love to support with Octant. So I'm really trying to cultivate like a deeper relationship that can really last into the mid to long term, where you guys are finding sustainable support for the things that matter to you. So how is this all going to work? Well, B Broad has been putting together a Telegram channel. And what we're going to be doing there next week, I believe, is collecting the wallet addresses of everybody who is interested in that channel. We're then going to be hosting we're calling them block parties. So just having a little party in the Octant Discord where I give a little showcase for like 5 minutes. It's a really simple app. We just go over like how the app works, how you lock tokens. You can have any questions that you want answered about the app. Our new head of product from Consensus is really interested in any first glance feedback, as negative as it may be. He's really interested to hear what your feedback is about the app so that we can improve. And then yeah, you guys are in the system, and the next funding round is going to be taking place in October. We also, if we can do this soon enough, we have a snapshot poll that's going to be deciding which projects are going to be onboarded into the funding round in October. I would love for the Doots to be one of those projects that gets onboarded, but we need to get supporters of the Doots into the system so that they can vote. So this is the thing that I'm trying to cultivate. Maybe it's a little bit of collusion, but I love JT, I love the Doots, I love the EVMavericks. So whatever, doesn't matter to me. You guys are awesome. Would love to get you in the system, and hopefully we can start to co-create some great things together over the mid to long term.
Yeah, thank you, James. Yeah, just for all intents and purposes, the Doots, I feel like, are just one piece of like the things the Mavericks could do. The only thing we were thinking about helping to support the Doots podcast and to help maybe grow numbers is perhaps do a little advertising. And it's really for the need to, I feel like, make sure people realize just how good Ethfinance is on Reddit. It feels quiet right now, but every time we get some price action, the iceberg floats up a bit. And but I still feel like we could be so much better. There's so many people I know that left and went to Twitter, and now they're just miserable. When I come to Ethfinance, I'm not miserable.
Yeah.
I mean, we're full of great talent, and we can do some good things. If you're just joining us on YouTube, if you jump in the Discord, the EVMavericks Discord, in the group chat here, if you want to join in the conversation, that'd be great. I've also got a link to the Telegram there as well. B Broad, do you have some words you would like to chime in on? Are you able to unmute, or are you busy at your McDonald's shop?
I hate Telegram. I absolutely despise it. It pisses me off that it's such a broadly used tool in Web3. Like, could not agree with you more. It fucking sucks. We're not using this really for anything other than like this thing, and then we can literally delete this channel and just be done with it, because I emphatically agree with you there.
Logri the Bard just joined Telegram.
Give him a heart in Telegram.
Yeah, so the Telegram is basically being used as a funnel for addresses. Is this correct, James?
But I just threw a ton of information at everybody. I don't know. Is it okay to ask if anyone has questions that I could ask?
Yeah, 100%. Yeah, I was just mentioning the Telegram, to be clear, is kind of where we're aggregating people's wallet addresses for now, right?
That's all we're using it for.
That's
we're
all
just
we're
gonna make
using
sure
it for.
everybody gets its tokens, and we're all good to go. So the reason that we're doing that is because I've been hosting these, we're calling them block parties in our Discord, and you can't gate Discord calls. So we've had a bunch of people jumping onto these calls, as we're going through this and they're like, where are my tokens? Well, you're not part of the EVMavericks. You're not part of whatever. Like it wasn't the intention to get people who are just popping in. We're trying to be very intentional about where we distribute these tokens. So that's the only reason why we're like aggregating this right now to just get a list, of wallet addresses in Telegram, and then yeah, get out of the group, delete it, burn Telegram, do whatever you want.
Very good. B Broad, I didn't know if you were going to be able to chime in at all, because I know that you've been kind of working behind the scenes, getting some of this organization underway. He is going to be the point person for this. I'm merely an assistant at this point, helping to get the message out as it comes in. Go ahead, Ben.
Well, I'm just I guess a 1 year user of Octant, and I found out about it on the Weekly Doots podcast. So I'm just a big supporter. And when JT mentioned that James was interested in offering GLM tokens for the podcast, we just sort of like kept talking and thought, why not all of the EVMavericks and not just focus on the podcast?
Exactly.
So I'm here as like a bit of an evangelist, and yeah, like collusion, but the best kind of collusion, because it's for public goods and it's to help like our own public goods and to help the Ethereum ecosystem. So yeah, that's how I feel.
Very good. Yeah, and we can come up with any number of ways to we could collectively vote as a group to support projects even outside Ethfinance if it makes sense. It's basically like we're being handed some bags. We're able to steer the ship how we see fit, which is it's truly awesome. And for those of you that don't know this, like James and I met at ETH Denver a couple of years ago, and he was actually our 7th guest on the Daily Dudes podcast. This would have been, I think, back in February sometime. And, we were I think James has really gone to the map for us with the Golem Foundation to help our community at least have a chance at accepting some GLM, staking it, and steering it where it makes sense. I mean, folks like Hani Abu, and then you got Austin S2 with the Astis relay sitting in the chat here. God knows what Logri the Bard is putting on tokenomicsexplained.com. I mean, there's a variety of things. I think that a little bit of money here and there to help pay the bills, like, whatever web hosting services are being paid for. I don't know.
So I have a question for Logri.
Yeah.
Really quickly, we're going to be running an education round in collaboration with Gitcoin in September. So apply to that, please, if you are interested in maybe getting a bit of funding for the amazing work that you've been doing and what I've been consuming on a regular basis. Yeah, we can chat about that async after the call or something. But yeah, would love for you to apply.
I'm happy to do so. I will say that I just had a baby not that long ago, so
Congrats.
The hours. Thank you. But the hours I have available, like if people are going to be funding a grant round for me for retroactive work that I've done as like an alternative to straight donating to my website, totally great. But if people are donating because they expect me to be able to spend more hours on my website, it's not a matter of a lack of motivation at the moment, right? It's a matter of competing priorities. So
a much higher priority.
Yeah, exactly. So I don't want to put myself in for a round, then people go, oh man, like, I expect to see a lot from him for these donations. This would be, if people are going to go through a grant round for me, it needs to be for the work I've already done, just for retroactive funding, not for a promise of future work. Because I haven't had a blog post since like March, right? It's almost half a year. I've been working gradually on the Rabbit Hole Explorer's Guide, which is definitely a public good type of post. But it's just slow going because, well, my hours are spoken for and competing priorities and all that. So just a caveat there. But I can, even if I don't have the hours, my wife, who is technically the CEO of our little company, she can work through the application process for you, and we can do it that way.
Yeah, it's going to be really simplified. I'll get some more information from Gitcoin as we're kind of bringing it into scope here, and then share it with you both.
Great.
And we were talking about some targets as far as number of members to kind of get this thing activated off the launch pad. And I think you had floated the number, 25 to 30 Mavericks would be a good round number. That's enough people to form at least a working group. I mean, the more the merrier. And, now that we've kind of popping the cork off of this thing, maybe we could get a unified message, between B Broad and myself and yourself, James, and then we could put that in the daily. Maybe make it part of the sticky, like, hey, we're working on this group. And then I guess the other thing would be, do we want to token gate this group? Would you prefer it be token gated to Mavericks NFT holders? Do we want to go into that arena or not? So those are all questions. Yeah.
I would lean on your expertise and kind of what you have going on in the Discord. If you think that there's like farmers that would try to farm this, then yeah, let's gate it with the EVMavericks NFT. If you feel that it's just high quality people through and through in the Discord, I don't mind it being shared with everybody. I don't expect this to be perfect. I would imagine that there's probably going to be somebody who says they're interested and then goes and sells the tokens. It's all good as long as we have a high enough retention rate on this. And it doesn't have to be a one-off thing. So I was thinking 20 to 30 people would be great initially if we can get that group together, and then another couple weeks, there's a handful of Mavericks, even the same size group we're talking about now, that want to get involved. And let's do it. This doesn't have to be a one-off thing either. I would love for us to just onboard people who care and who are willing to participate. The one other thing I didn't mention, and why I think you would really want to keep your tokens locked in, is because we are going to be setting up a public goods raffle where multiple winners with one grand prize winner are going to be selected from each round, and prizes of upwards around 100,000 USD for the top prize winner, with 10K for a handful of winners as well, with even just a dollar donation to public goods would be getting you in the game, so to speak. Granted, it's going to be weighted a little bit based upon how much you donate to public goods, so you're buying more tickets the more you donate, but nevertheless, if you're already in the system and you're funding public goods anyway, and it's quadratic voting and you're having a crazy amount of impact from that, then this is just kind of icing on the top that you could win something really massive on your end as well. And one thing to really touch on that as well is you might notice that the tokens that you get, because we have 1 billion tokens and you're getting 800 tokens, that your rewards are really, really small for what you're going to be donating. The leverage from our last round for folks that were donating between $5 and $10 was somewhere around a 600x leverage. So for every dollar that you donated, there was $600 from the matching pool that was added to it. So when you donate, it goes really, really far with this QF mechanism. So we just got a bunch of things I think we're just trying to get into alignment that are both very beneficial for the user and beneficial for public goods. And yeah, I would love for you all to join if you're interested.
That's excellent. Does anybody have any questions? Okay. So as far as the NFT,
I either did my job very good or very poorly.
I think it was great, and it sounds fun, and that's the key, especially with having this idea of a raffle thrown in the mix too, because then you could split your earnings there and buy more GLM, lock that up, or whatever. Oh, so it can be kind of a self-feeding machine. This is outstanding. I really appreciate you hanging with us today. If you can hang out a little bit, we'll get started on our Doots. I know that you've got to run here before too long.
I got to run in 15. Yeah, so I got 15 minutes to hang, man.
All right, let's do it. And also, I see, cool. I mentioned Austin from Astus Relay, but I see Kudetas down in the chat as well. We got Lantern Prince here as well. This is cool. It's good to see everybody. And with that, let's rock and roll. Let's get straight on into this week's Doots. As normal, I never look at these ahead of time, so it's always a surprise to me. Fimar Hal shares their experience at EdCon. Fimar Hal is a duder number 70. I broke my no conference rule and attended EdCon in Tokyo this year. I didn't see any posts about it, but maybe I missed them. It's been hectic running around to try to attend everything and missing most of it. Either way, I thought I'd share my subjective experience as a normally privacy-conscious, grumpy internet man. First, the quality of that conference was impressive on every aspect. Coordinating any event is no easy task, and here the organization was top notch. As someone who doesn't speak a word of Japanese and can hardly mumble coherent English, the EdCon team aptly corralled me and others wherever they needed to be. Great venues too. Most days were at the United Nations building. I think the whole building catered to the convention. One big conference room housing around 400 people for the main talks and side conference rooms, so on and so forth. Moving on. Of course, this is what matters most, the quality of the talks. I have to say this did not disappoint. There's something to be said for being committed to an event and passively sitting there for hours, as opposed to surfing the internet and actively seeking knowledge. Whether you want it or not, when you're physically present, your brain starts to absorb knowledge like a plant does, photosynthesis, and it goes on from there. This is a rather long post, but holy cow, this Fimar Hal, he's never been to a conference before, and he wrote a book about his experience. This is fantastic. Let me do this paragraph. The focus was on the next 10 years of Ethereum, touching on where we are now, and where we were, where we're at, and where we're going. The main idea, we got the fees down. Now we need to get back to 2016 UX of a monolithic construction from the user perspective. Main pathways, gas auctions. You have ETH on any rollup. Someone else broadcasts your transaction on the desired rollup for a fee. Competition should push that fee down to negligible levels, for example. Okay, moving on. Let's get to the bottom. This is crazy long. Great job, Fimar Hal. All right, let's see. It's hard to stay objective when you're having a good time. I now have so much positive bias towards several protocols based on my people encounters. There's a reason many societies have strict anti-bribery laws. Most of us get swayed easily, and man, do I feel bribed out in the abundance of free stuff thrown my way. Yes, so this is
the free stuff thing is true of every conference. You'll show up and there's t-shirts every booth. Like by the end of any conference you go to, you can have a full wardrobe. We all dress like hobos because we get so much free swag.
Yeah.
Problem is the quality though. There's a huge like range.
Yeah. You get some like really soft, really good swag, and you get some stuff like this doesn't fit right. It's the
big armpits and yeah,
exactly. You gotta be discerning at some point if you don't want to. Unless you're starting from absolute zero, you should probably be discerning on what swag you choose to take.
Oh, my team made some really terrible swag one time, and I had to shame them pretty poorly. Like, this is unacceptable.
I can tell you, James, after meeting you in person, you definitely would do the fit check a lot better than I would.
I got some nice embroidered swag from Alchemex. That was good.
Not after your barbecue though, JT. Yeah, it's tough sledding after that.
There's a reason why I don't have expensive T-shirts, because I usually get sauce stains on me at some point. The
other thing I'll say, he called out a few protocols you didn't read in that post. Mm-hmm. One of which is Phoenix, which is an FHE L2, and FHE is a topic I've been very excited on. Even just yesterday, I was reading a summary of some how that stuff actually works and sort of the family of technologies that go into FHE, and the potential to bring private computation to people is just a really exciting thing that is particularly relevant to DePIN or decentralized computation, because you don't trust the person doing the computation. So it's one thing to say, I'll trust Amazon. It's another thing to say, I'm going to trust some random guy in Thailand I've never met, not to write down my query and then put it on Ocean Protocol and sell something about it and use it against me, right? So for DePIN to thrive, many aspects of it are going to need to utilize FHE. And so he talked about listening to the passion, depth of the FHE founder at the conference there, and we kind of glazed over it, but I wanted to call that one out. They are one of the more interesting AVSs I see in development right now.
It says, in particular, I've found all the talks on MPC, multi-party computation, TEE, trusted execution environment, and then here we go, Logri, FHE, which is fully homomorphic encryption, especially interesting. Many of us have seen these terms many times. The most adventurous among us even tried to read Vitalik's blogs on the topic. Personally, it still failed to click for me until I sat in these rooms and I saw the points explained and re-explained in a variety of different ways by various speakers. Major props in particular to the panel between Guy Itzhaki from Phoenix and Zhen Yu Yong from Web3 Auth and Chuazhang Liang Automata. Three guys who manifestly know their stuff and engage with each other to make these concepts obvious to the crowd. The theme was MPC versus TEE versus FHE, but it really came down to them explaining where each solution makes the most sense. I don't know when EdCon will put the videos of these talks online, but if there's one panel I suggest watching, it would be that one. Excellent.
This stuff, I mean, you get into the technical details, you can rabbit hole on this and get a whole PhD. It is extraordinarily deep, like well of knowledge you can draw from. But even just informatically, most FHE works on dot products, which if you remember your trigonometry from high school, right, JT? I'm sure you have that one just right in the RAM all the time, right?
I smelled that room passing in the hallway once. I don't even.
So basically, you put the real information, the higher order bits, and then you add noise to it with every operation. And so you have like this bit space, and you have the lower order bits of it being the smaller number, the smaller portion of the number is like this noise factor. And so you can do successive operations, and basically you're adding noise until you hit some threshold where now the answer is indistinguishable from noise, right? So you have like a noise budget on how many operations you can do in the FHE space before you have to like checkpoint it, or kind of like it not literally decrypt it and recrypt it, but basically there's a way of having, this is wild. It sounds so like can't possibly be true, but there's a way of changing from one encrypted key space to another encrypted key space without actually decrypting it and letting the person doing that transition know the underlying data. Which again, that sounds kooky and impossible, but it is possible. It just takes more math. So I could nerd on this for many hours, but I'll leave it at this: that there are different families of FHE technologies. One of which is good for like sets, like circuits. Basically, you can calculate any Turing complete operation like as though you were writing it to a series of logical and or gates. That's one tree of technologies. And there's another tree of technologies, which is it's really cool. It hides the noise in the floating point arithmetic precision loss.
That
saying,
just rolls right off your tongue, Logri.
When we do floating point calculations, there's already inaccuracy in the calculation. We're just going to mask the noise in that inaccuracy that already exists, which is like a very insightful thing. But it's especially important for AI, because AI, you don't care if your image is like a little bit off here or there. It's these wholly creative things. I can change the seed and it's still a good result, right? I mean, I could add 15% noise. In fact, what an LLM does when it's generating an image is it injects noise into the image and then it denoises it into a new shape. So I don't care if there's a little bit of like, floating point precision loss. I'm not looking for a like bitwise identical output at the end of the calculation. I'm looking for approximately it's cool, and then it was also done without Microsoft having access to the underlying compute, right? Without knowing what I was calculating, without censoring my requests, right? So this other set of technologies that is sort of a lossy one, but much, much faster, is really exciting to me as someone with a background in AI. And like, I love the whole FHE rabbit hole. I encourage anyone that understands trigonometry to dive down to lab-based cryptography and get into it with me. Let's talk.
Okay. Logri, I understood some of those words. I'm just
absolutely.
I'm glad that you and Fimar Hal have a shared love for FHE. Yeah, I'm just nervous. My daughter's starting intro to calculus because, as many of you know, I enjoyed freshman algebra so much I took it 2 years. So, uh,
Well, get her to understand dot procs, and then we can talk about FAT together. It'll be fun.
Okay. All right. Moving on down. User PA7X1 speculates on future blob space price and demand, and PA7X1 is a deuter number 64. Estimating the late game economics of blob space. This is just a quick back of the envelope math to get a taste of the numbers. I'm sure it is. Feel free to tweak the assumptions as you see fit. With current blob space target of 3 blobs, 1 shard, that's 500 transactions per second times 60 times 60 times 25 times 365 seconds per year. Okay, is 15,800 million transactions per year. Whew. Say average transaction fee is 5 cents, which would make the median even lower, around 1 to 2 cents, making even the lowest added value use cases, for example, pay for coffee, perfectly viable. This is likely extremely conservative because if we start having serious financial applications on top of Ethereum, for example, tokenized RWA, those fees are ridiculously low. Your broker charges you easily 5 USD per transaction, and registration of car titles, houses, etc. is even more expensive. So it could push the average much higher easily. It could be 15,800 million transactions per year times 5 cents per transaction, which would equal 800 million USD per year. Say Ethereum captures 80% of that. This assumption is based on the current burn percentage, which has typically floated around 80% of the transaction cost. This is the trickiest assumption. I don't have a good way of estimating how much value will be captured by Ethereum from L2 transaction fees. This is dependent on the attractiveness of data availability on Ethereum versus all other options. So feel free to tweak this value. If we assume 80%, that gives us $640 million per year with 1 shard. With full dank sharding, we will go up to 64 shards. So that would put a order of 40 billion USD per year of burn just from blob space. That gives you an implied price of ETH at 30 to 35,000 USD just from blob space alone. Add to that Ethereum's proper block space, which in the past has been able to capture a similar figure of burn, and you get a price of ETH around 50 to 100,000 USD. The price estimate is simply a consequence of assuming ETH cannot be absurdly deflationary. If it were, it would cause a supply crunch and the price would go upwards, resulting in less burn until it stabilizes around the price that gets us close to zero inflation. Mind you, this is a long-term view of the roadmap. It will still take us years to deliver dank sharding and 64 shards and onboard all the use cases, but it serves to illustrate how ETH late-game economics could look like. Disagree with any of the numbers? Change them. The point is not so much to derive to a specific figure, but to get a sense of the order of magnitudes we would be dealing with. That's incredible. Okay, I like that. That's a long view look. I know Ethereum moves slow, but maybe it's just me, but I feel like things are a little less slow than they used to be. I feel like some of the development is picking up like in tandem at the same time, several different things instead of just one big thing every couple of years or so. So interesting.
You mean the L1 developments?
Yeah,
Pectra is packed full of relatively small stuff, but it's got a lot of it in there, right? I feel like they've been very ambitious with this next hard fork.
Good. Okay, here we go. CMonkey82, legend. CMonkey82 has a warning for all validators. I don't like it when CMonkey82 has warnings for all validators. Okay, word of warning to any validators out there. I recently updated all of my Linux Mint 21.3 systems to Linux Mint 22, and every one of them that had crony D configured had it removed during the upgrade process. My one Ubuntu 22.04 server also didn't have it after upgrading to 24.04, but I'm not certain that one ever did. So I don't know if this is par for the course for any Ubuntu-based distribution or if it's specific to Linux Mint. In any case, if you aren't running CronyD for TimeSync, I recommend it. There's a CoinCashew guide for setting it up, but I recommend relaxing the frequency settings to min pole 2 and max pole 10 to avoid KOD rate messages. Thank you, Sea Monkey, for your service, because he's a duder number 40. OG, been around. Good dude. Awesome. Very good. Moving on down the list. Mr. Catface13 shares a memo from Bitwise. Oh boy. Duder number 21, Mr. Catface13 says, the most recent Bitwise memo from Matt Hugan is pretty great. I actually got to meet that guy at a very, very small conference in a room at a hotel in Kansas City. I didn't really know who he was at the time when he was talking, though. Man, he was a joy to listen to. That guy can talk like he's just enjoyable to listen to as a speaker if you ever get a chance. Bitwise, dude. I didn't realize who I was talking to at the time. He was just so personable and nice. I would make that dude a barbecue for sure. The most recent memo for Matt Hugan is pretty great. Here's the relevance section. The last time the market melted down like this was March 12th, 2020. That was the day the world realized that COVID was a big deal. In case you've blocked it from your memory, let me remind you, it was chaos. The Dow Jones Industrial Average sold off 2353 points on March 12th, its worst day since 1987. Tech stocks were in free fall, as were commodities. We all thought the global economy was going to end. The president would declare a national emergency the following morning. Among all assets, Bitcoin crashed the worst, falling 37%, and it was a breathtaking one-day move. I remember that, wiping out a year's worth of gains in just 24 hours. It felt as we might never recover. The media claimed Bitcoin had failed its test as a hedge asset. And then something spectacular happened. As global leaders stepped in to stabilize the economy, cutting interest rates, printing money, Bitcoin began to rise. A year later, it was trading at 57,000, up more than 1,000%. In retrospect, March 12, 2020 wasn't a time to panic. It was the best buying opportunity for Bitcoin in a decade. It's easy to see why with the benefit of hindsight, nothing fundamental had changed about Bitcoin because of COVID. Hey, B-Broad, you're hot micing, my friend. The maximum number of Bitcoin that could exist, 21 million, was the same on March 11th as it was on March 12th. You didn't need to rely on any bank, government, or company to store wealth in Bitcoin on March 11th, and that was still true March 12th. At the same time, COVID supercharged the reasons for Bitcoin's... I'm going to mute B-Broad real quick. Okay. At the same time, COVID supercharged the reasons for Bitcoin's long-term rise. It showed that central banks would bail out the economy at the first sign of trouble. It demonstrated the limitations of centralized institutions, and it reminded us that the future is more online and digital. The changes all pointed in favor of Bitcoin becoming more important, not less. And in the long term, that's exactly what happened. I see the same setup today. Here's an edit to add to this. But in brief, weak economic data in the U.S. on Friday sparked concerns that the global economy is slowing. This prompted a panic in Asia, where a rapid unwind of the yen carry trade, a strategy aimed at exploiting interest rate differentials between currencies, pushed Japanese markets sharply lower. Things weren't helped by rising concerns over geopolitical risks in the Middle East, where Iran is threatening to attack Israel. These events collided with idiosyncratic negative developments in the crypto market, where a large market maker, Jump Trading, ran into trouble and faced forced liquidations of large positions in ETH. That is Mr. Catface13 is sharing a memo from Matt Hugan from Bitwise. What a banger. What a banger. No doubt. That is a great post. Thanks, A-Word, for adding that into this week. All right, user Dr. Eth fact checks their own comments from a few days ago, and user PA7X1 also has some great input on the macro topic at hand. Dr. Eth is a duder number 23. Okay, Dr. Eth says, yesterday I made an apparently well-received lengthy comment of disorganized thoughts regarding the stock market crash that occurred this week. I want to correct some inaccuracies or imprecise details I explained regarding the particular events in Japan. The immediate cause is the carry trade, but some corrections about it and the situation in Japan. The first immediate reason why this happened is because while the Fed and the ECB raised rates to control inflation, the BOJ, Bank of Japan, kept rates at zero. This lack of coordination with other central banks, which is entirely within the rights of the BOJ as a central bank of an independent nation, but not ideal, has made a very profitable trade. Borrow money in Japan, sell JPY, buy USD or EUR, and put that money to work in public debt or other yield-bearing instruments. Or, if you prefer a riskier trade, buy stocks denominated in other currencies. So both the FED, the ECB, and the BOJ are at fault because they kept rates high for too long and kept rates low for too long, respectively, creating a very profitable trade. Hence, why the central bank coordination matters in large markets. Also, and then he goes on, and also bad data from other directions causing more drawn down in the market in the days prior to yesterday's crash. Okay. The market had already been pricing in a slowdown in the economy with unexpectedly low job creation in the U.S. and less than ideal earnings from U.S. companies. The most concerning figure was the job data. This is likely what caused that first drawdown that brought us to 2,700 to 2,900 in the past couple days. But other markets have also been slowing down, not just the U.S., China, too, apparently, and Europe, we already knew was weak economically from several different directions. Just an example of Europe's weakness at the moment could be seen through Germany's GDP growth, which shows a contracting or stagnant economy. Rate hikes most definitely affect this by reducing demand and making credit more expensive. And Germany already had a weak 2022 with lots of noise in its trade balance as a result of the sanctions to Russia, though this is old news. And then he goes on, I want to fix up some inaccuracies that I laid out that I want to rectify or correct. He says, I said the BOJ had near 0 or 0% interest rates for almost a decade, but it's way more than that. The BOJ has had interest rates at 0 for most of the past 20 years, with short periods of increase that never went above 0.5%. Hence, this trade being not just recently profitable, but historically profitable, especially because this monetary policy from the Bank of Japan was intended to remain for as long as possible. Even now, the rates are extremely low at 0.25% despite increases. The higher the difference between the BOJ rates and the FED ECB rates, the more profitable this trade becomes, especially because the JPY was particularly weak versus these currencies. It goes on. And then I also said the BOJ wanted to end the carry trade. This is not necessarily true. The BOJ only wants inflation in Japan and purchasing power to remain static or increase. Currently, Japan's economy has been contracting. The carry trade had been hurting the JPY, causing loss of purchasing power because, one example, commercially, if their currency is lower, their exports are cheaper, but imports are more expensive. Generally, this hurts citizens, so the BOJ increased rates to reduce this disparity and give a little more strength to the JPY. Given that many traders expected the rates to not increase in any meaningful way, and especially expecting the intent to increase them from the BOJ would remain the same, many traders took recent short positions on an already weak JPY, which caused a large cascade of margin calls on JPY borrowers performing carry trades, resulting in that immediate large rise in the JPY. I won't get into why the Nikkei crashed harder than it ever had in history. It could be due to several factors. but I haven't done any profound research on it. It could be margin calls due to shares being collateral to loans. It could be due to bad earnings. I don't know. There's probably multiple things at play here. User PA7X1 replies, pretty good content both yesterday and today. Some quick complimentary comments. The Bank of Japan cannot raise substantially interest rates because Japan's debt to GDP is a ridiculous 263%. This ties their hands. Their interest payments would go through the roof. Yes, their debt is issued in yen. They could always print more, but you are just trading one evil for another one. The Nikkei went down. Nikkei, I hope I'm saying that right. Nikkei went down because the yen is strengthening to reflect the new conditions. Japan's economy depends a lot on exports. If the yen goes up, their exports are less competitive. This compresses earnings of their companies. Markets try to see into the future and price that. Plus, minus any short-term market turmoil, liquidations, etc. But this is short-term noise. The carry trade is not ending here. It has started to unwind. The yield differential is going to keep existing for quite a while as it's related to 0.1. Because of that yield differential, the yen should be weaker and devaluing over very long time horizons, such as decades. What we have seen is just the tip of the iceberg, the most degen of the degen levered to their tits, getting exposed when the market moves a bit against them and having to close down positions in a disordered manner. Seems some liquidations must have happened, but nothing is publicly known yet. Wow. This community has got some of the freaking most brilliant people. It's such an incredible bag of expertise.
It just like delivered to your door, right? Like they just show up and drop knowledge bombs on you on
Unbelievable.
100 topics. It's great.
Unbelievable. I mean, it's just incredible. I think people, they hear Ethfinance and they just assume it's all just ETH all the time. It's like, man, there's some really good macroeconomic.
There's some science in there. There's some macro in there.
Mm-hmm.
There's a bunch of ETH tech in there, right?
Mm-hmm.
Like we talk about L1s, L2s.
And like just a chef's kiss amount of ship posts. And
we talk about other chains as well, not just ETH.
Mm-hmm.
Certainly talk about things like DeFi or games, right? We were talking about Influence ETH the other day. There's just a bunch of things that are not specifically Ethereum or not specifically finance related, but fall into that bucket of things that we talk about. And macro is definitely one of them.
It's amazing. All right. Professional Noise X, user Professional Noise X is a duder number 2 getting on the weekly jam, opens up about the recent liquidation. Oh boy, I don't have tissues. Skip this if you don't like sad stories, but I need someone to hear me out for my sanity. Boy, I've been there, my friend. These are the hardest days for me ever. The other day, I got liquidated on my ratio long on the scam wick. God damn. It was not a very aggressive position. Actual break-even ratio for collateral to debt was at 0.0355, but I guess I got to 90% LTV on the protocol anyway. I did not expect the ratio to drop that much that fast, and I was stubborn and did not reduce it in the coming hours when it was at 0.045. This is where I don't know if I can ever get closer. The protocol that I've used, which I don't want to badmouth, but it definitely has some design issues, leaves the difference between liquidation threshold and actual value all to the liquidator. All this to say that the guy liquidated me at barely 90% LTV and actually got a 27 ETH payout on a 225 ETH position because it probably actually bounced back in the time it took for him to actually exchange the BTC for ETH. If I had not been liquidated, that position would be worth something like 40 more ETH than I have now. Had I kept most of that 10%, would have been 25 ETH. Instead, I have 0 from that position. I feel like I got robbed. So for me, that's it. I'm back at my initial ETH stack after all these years of working to increase it. I was at my record just over a month ago at 2x the current ETH amount, and now I'm just left with years of stress for nothing. I can't honestly bounce back from this. I don't have the mental strength nor the stack to risk it anymore. I know that I would probably blow the rest trying to get it back quickly. I don't know how will I ever overcome this. I have missed real life goals. And I've been stressed constantly trying to increase my internet coins. And now I have lost all that I had built. I will stick around and follow the progress for Ethereum, for which I truly believe in, with just a different outlook for myself and a bad memory of all these years. Hopefully, I will be able to partially forgive myself for the mistakes I have made, because right now I'm unable to. Thanks to Ethfinance, you have truly been a beacon of light in all these years, and that will always be a nice memory.
I think it's worth going to some of the replies to that, right?
Okay.
You can see the outpouring of support that we tend to give to people in our community.
Oh my gosh. Crypto's in the Bloods, Duder 46, big replies. These are all teachers, man. Tricky Troll.
Exactly.
Duder 113. 18 small, Duder 4, H blast.
Read the basic summary of it, right? There's a bunch of emotional advice, a little bit of technical advice, like a little bit of course we can never give you the money back, right? It's a blockchain, it's immutable, it's gone, but it's not without like recourse. There are still things that you can do today, right? We can grow from here. So I mean,
this part,
there are people that have talked about like different platforms to use that would have not let this happen to them. There's people that have said, hey, I've lost similar amounts and like, here's how I've emotionally coped with it. A little bit of therapy on there, but everyone is just emotional supportive, right? That's us come together as a community.
There is this important line that I read, and my big takeaway is, so that's it for me. That's it. I'm back to my initial ETH stack. So he does have like his initial ETH stack. He didn't lose all of his ETH. And no. I was feeling just like this. It was the flash crash of 20 whatever, when like cascade liquidations, and I had to pump a bunch of ETH into a maker or whatever vault thing to prevent myself from being liquidated. And that was gut wrenching, man. But I didn't have my whole stack in there either, but the amount of ETH I spent trying to save it, it was like, that stung, bro. I mean, it was pretty nasty. But
I just got back my 10% of my empty GOX coins from 10 years ago.
Coup d'etat.
Congrats.
Yeah.
You're rich. Congrats.
Coup d'etat, man, coming in hot with the OG Mount Gox 10 years ago, man. Wow.
Yeah, that must have been quite a windfall.
Well, no, it wasn't, because what happened was
Hey, coup d'etat, can you get closer to your microphone? It's a little...
Oh, yeah.
There you are.
Yeah, sorry. We, when MT GOX went down, they didn't stop trading, right? So you couldn't get money out, but you could put money in. And I was foolish enough and young enough to trade the coins that I have for about 20% of the coins by the end. And then I got about 20% of that back. So it's a long forced hodl, which was, is relatively negligible on my portfolio. But I guess it's nice to have some kind of resolution.
Yeah.
After 10 years of getting postcards from Japan. Anyway, it was the point really was, we've all been there, give it enough time and everyone comes right back, and at least he's got his initial ETH stack.
Right on. By the way, it's good to hear your voice, and I'm glad you were able to join today.
Oh, no, it was fun. Thanks for this usual, JT.
All right, moving on. Crocodile Mansion, speaking of OGs from way back in the day. Crocodile Mansion says, damn, I'm reading the comments. Oh, by the way, he got engaged. I told him, I'm like, he's over in Europe. Just let me know if you need a destination DJ. I'll do my best. Crocodile Mansion getting flashbacks and shares his two-way. Two-way, I think is what it meant to say. Damn, I'm reading comments from over-leveraged people after yesterday's events. It's a trip down memory lane 2018 to 2020 where plenty of people lost their precious ETH. The biggest Ethfinance loss I'm aware of was an 8,000 ETH position that got halved. Back then, we were talking about a couple of $1 million, if I recall correctly. There are no, quote, big lessons, unquote, IMO, in my opinion. You just have to go through these events to learn, or at the very least, treat much more carefully than you think.
Okay, but there are a few lessons.
Sure.
One is he got particularly hurt by a liquidation technology that is outdated. And there are other platforms you can use with different liquidation technologies that would have prevented the loss of that 27 ETH.
Mm-hmm.
So step one, just for example, Curve USD. Basically, the collateral you have is put into an AMM position that counter trades the price. So it went down and then it went back up, and he would have been liquidated and then he would have been unliquidated as it bounced back up. And he probably would have lost like 0.3% or so of the position instead of what he did lose, right? That is a huge difference, and it costs him very little, right? To do something like that. And the other thing is there are lessons to be learned that we tell everyone all the time, and that is leverage will fuck you up. Mm-hmm. You think you're like being very safe and taking 20% leverage, and like the ETF is coming and there's going to be all this inflow, and you're 90% confidence, and so you let that creep up to like 33%, LTV, and then suddenly, what the hell, right? Yeah. Then the yen crashes, which is completely out of left field. It's not part of your thesis, and there you go, like a life lesson learned, which is don't fuck with leverage.
Yeah, you can feel like that you're 100% right about what the future will bring, but you may be right, just not on the time frame that you thought originally. So
you just can't really go to sleep. You can't mm-hmm. travel. Like if you're in a leverage position, you have to be on it. Like when people were doing the Luna thing and they're making their 10% or whatever it was on the USD equivalent they had over there, right? And I was like, I would never go to sleep with one of those positions open. Literally never. Like this is waiting to crash at any given moment, and it's going to crash while you're asleep, and you're going to get burned bigly, right? Like you want to go and play with fire, you better be awake and watching it. Mm-hmm. And prophetic enough, that particular person actually did get burned and lost significant sums because they slept on it.
Yeah, there's always
crypto is basically leveraged TradFi already, right? So leveraging in crypto is like leveraging leverage.
When I say leverage will fuck you up, I'm mostly referring to price volatility risk here. There are types of leverage that are slightly more responsible. Like I talk about my interest rate carry trades on I have a post on my website called Harvesting Interest Rate Spreads. Like that is a different type of leverage. It still can go sideways on you, but it's not something like what would have happened with the Japanese bank here wouldn't have affected you, right? You need some like smart contract tax for something like that to affect you, which is still possible, but order of magnitude less risky. So there are different types of leverage as well. If you know what you're doing and you do so responsibly, there is a good use case for debt, right? But it comes with risks, and people are just really bad as a market. Like we're a bunch of degens, we're really bad at underwriting our own risk.
Yeah.
So unless you are a seasoned professional and really have a clear head and aren't making emotional decisions, right, and have contingency plans and aren't investing money you can't afford to lose, unless all those things are true, don't fuck with leverage.
The other part of that is
we all fail. Yeah.
Well, I was just gonna say real quick that another thing that like doubles down on that is all the different leverage protocols that come out, and then people they dive in.
They're so fun. I gotta get my points, man.
They gotta get the points, the airdrops, and all that. Go ahead, Kudeta. Sorry.
Oh, I was gonna say. I mean, I remember 2018 well, and the years afterwards. I mean, no one could imagine that the price would go that low, right? Mm. And
we were laughing at 324, right? Yeah. We're like, easy peasy, you idiots. Never going close to 324. Look, we went up to 1400. Dun dun. Fuck us.
Yeah, and that seems to be the way that Ethfinance people get done is by just not being able to failure to imagine the drops.
We believe too much, yes. And at least out of that one, came HodlerCon, and we turned what was a traumatic shared experience into something that brought the community closer together. At least there's some silver lining there. also that buying at 100 was certainly an opportunity.
Yeah, no kidding.
It was hard to push the buy button, and we were all poor at the time, so it was even harder. But those of us who did, that's where I got at least got a sizable percentage of my stack for not a sizable percentage of my net worth there.
There you go. All right, moving on down. Needler OP shares some reasons to be bullish. Needler is Deuter number 35. Here we go. Going down the bullets, friends. ETH ETF and positive flows. The year-over-year M2 supply after 16 months of contraction in layman's terms. Powell is printing. We just had a black swan, 1 per 10-year 14 event comparable to COVID crash and an 08 financial crash. ETH retail is shitting the bed due to poor risk management and is selling now to institutions. That is I fully agree with that one. Bitcoin dominance and altcoin dominance cycle theory points towards alt capitulation and a Q4 alt season. I'm under the belief we have experienced the last flush accelerated by the BOJ Black Swan instead of mid Q4. ETH is underperforming all assets within the space currently. As an example, in 2019, after the mid-cycle top, we saw crypto markets and ratio bottom after 75 basis points of cuts, which will be 2 Fed meetings in our case, early November. The time to be bearish was last week. You're effed now, and it may be too late to be bearish. Most metrics and leading economic indicators are flashing positive or neutral. Employment is still historically low. The recession has already happened, and we're coming out of it. The only VE signal is yield curve, which is still screwed up. The source is the NBER Recession Indicators Conference Board. They said in inflationary environments, the unemployment SAHM recession indicator fires during or after the stock market drawdown has occurred. It appears to have been front-run substantially this time with all the recession fears in 2022. And the bonus, short-term bullish indicators, Jim Cramer bear posted on crypto a couple days ago. Boom, boom, boom. Awesome. Time to buy. And then finally, Tricky Troll for this week rounds out, talks about the mindsets after a setback. He's been one hell of a writer over the years. I just wanted to share a bit of mindset change I've had over the last couple of years in this bear market, which I discussed in response to a fellow ETH financier at the end of yesterday's daily who lost a lot of ETH, but not their whole stack, to a liquidation. I'd love to hear how everyone else who is quite far into this game has had their mindset change over time. I also hope it doesn't come off as pretentious. I'm not some Zen guru who is holier than thou for being grateful for what I have. Far from it. I just stress a lot less and chase the calculating my net worth dopamine hit much, much less. And I hope others can achieve that too. He says, hey friend, I can relate. I lost about 30% of my stack to shitcoins and another 20% I have cashed out because I let my lifestyle adapt based on a price movement the last bull run, which didn't stay around and which I didn't take anywhere near enough profits on, but still had a lot of taxes to pay. I recognize that your story probably stings a lot more than mine ever did with the scam wick, but I think the important difference here is I am 2 years further down the line after taking a big L than you are. After my big sudden loss with a couple of shitcoins, which basically went to zero, I went cold turkey on the BS. Anything risky is out of my portfolio. No shitcoins, no leverage, not even one single blue chip or darling altcoins like Link or RPL. At the end of the day, they're all about taking on risks to get more ETH. But that's just a form of gambling. So all that's left is dollar cost averaging, which is out of the picture for me as a student, and staking. So I've just been comfortably holding and staking for the last 2 years. As time has gone on, I have come to terms with not being able to attain my more lofty price targets and bullish financial goals. Instead, I have focused on what I do have, and holy cow, I'm only sitting on one home validator, but my God, this still puts me way ahead of anyone else my age that wasn't born into the 1%. The bear market has been humbling for me in a good way. I'm no longer trying to gamble for more ETH, so I have had time to reflect on what I have and how much freedom it can bring me and how much less it makes me stress over tough financial situations on a daily basis. My friend, hang in there. You have not lost it all. In fact, if you're patient and responsible, you're right about to find what it is you have, and it's more than you think. Just give your mind time to adapt as it moves away from a dopamine-filled moon chasing, ETH gambling mindset and towards a more grounded and grateful one. Hope it doesn't sound cheesy or pretentious, but losing half my stack has been good for my wisdom, financial responsibility, and mental health. Try not to stress about it all too much and just let it be. From the sounds of it, you're still in this game, and I don't want to lose any more ETH financiers to liquidations and high-risk plays. I know it's painful now, but it will get better. You just got to focus on the right things. And that, my friends, is how you put a freaking dot on the end of this amazing episode. Thanks again to James from Octant for hanging out with us today. Get on over to the Discord if you haven't. Check out the chat. We've got a Telegram thing. I also put it on the daily. If you guys want to jump in and throw in your address and help us stake some golem on behalf of the community. So stick around after the live stream because we continue the party in the hotel lobby on Discord for a bonus hour of popcorn. It's a fun place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of Ethfinance and the EVMavericks DAO, my name is JT. Cheers and big hugs from Kansas